there's really three types of stock that you're looking at when you really go into the US market. The first is where you're buying at auction stock. So we're talking about post-foreclosures here, vacant stock and actually turnkey properties. So let's look at auction stock first. So effectively with our auction stock, we're actually purchasing these direct from the lenders. So we call these real estate owned properties that we talked about earlier. Now you can negotiate, but you've got to remember that this is a slightly more competitive market. So don't confuse the fact that there are a lot of foreclosures with the issue that it's not competitive. The good properties will still have competition around them. It's the ones that are selling for, you know, prices that nobody wants to touch or that really are in undesirable neighbourhoods. They're the ones that sit on the markets for a long time. What you want to do is find a contact that has influence with the banks and the lenders who can help you negotiate a good deal. When we look at auction stock, you've got to remember you're buying in as-is condition. We mentioned this earlier. So that means whatever the property, whatever the state the property's in on the day that you settle, that's how you take it. That means that there are more work and time pressures involved, and obviously it can be a little bit stressful and emotional because you're dealing in a sort of a pressure situation. When we talk about vacant stock, what we're talking about is stock that you're actually buying from someone who's actually secured that property at auction. So it's either one of these real estate agents we talked about who are selling them on behalf of the banks, or they're people who've actually purchased the stock and then you're buying them as investors. The sorts of relationships that these guys that are selling these properties have with lenders is really important because it will determine sort of how flexible and negotiable they're prepared to be and whether or not they send them the premium stock. Even if you're buying stock which is vacant, you still need to do your homework. Just, you know, in terms of the spectrum, you've got your auction stock, your vacant stock, and then your turnkey, but really you still need to do your own due diligence on a particular property. Now, tenanted is also what I'm calling turnkey. Now, turnkey simply means that the house has been bought, it's been fully renovated, and it's actually been tenanted. Now, the biggest advantage for us as Australian investors with this kind of property is that we're collecting income from day one. It's the simplest and lowest risk method of buying property in the US, from my perspective, simply because you don't have to get involved in organising contractors. Someone's already done all the work as far as the due diligence in terms of making sure there's no prior debt and so forth, and you're really just coming in and buying the finished product. Once again, I would say even with tenanted stock, you still need to do your due diligence. So really all that it means is that someone's made it a bit easier for you. I would also be saying, what is the method of actually finding the tenant that person's gone through? Because you don't want them to have put in any Joe Bloggs that's going to, you know, trash the house, or maybe he's not going to pay the rent on time. So you want to assess how rigorous the method for screening the tenant that was used. Guarantees over workmanship, especially if there's been any kind of significant rehab, I would be looking to say, well, what sort of guarantees are you going to give me over the workmanship? The bottom line is that your choice of property is going to be driven by what your personal preferences are, how much time you've got available to research the market, what sort of volume you anticipate buying, your strategy, your personality, and how hands-on you want to be, as well as your risk profile. So all those things will influence which kind of stock you might be attracted to. So let's actually talk about how we're going to assess these properties now. So we've already got a sense of the fact that we should be assessing these properties in conjunction with the feasibility. So the sorts of people who can really help you and be part of your team are people like local agents, property wholesalers, and for those of you who do have family or friends in the US, you can make use of those guys as well. It's my view that multiple opinions are always the best. Now, what I'd say to you guys is try and get help with the local research as much as possible. And, you know, I keep coming back to this, but you really must corroborate everything you hear. You can't take a person's word for it in terms of what's happening for that property. Look for agreement on the suburbs or streets that you're looking at. You know, do other people agree that that's a good place to be investing? Now, just remember that pretty doesn't equal good investment, and I will keep hammering that as well. The aesthetics of a property are important, but they shouldn't be your final decision maker. Don't get emotional about the purchase. If for whatever reason that deal slips away, then just move on. Trust warning. So if someone gives you some kind of red flag or warning about a property, I would be taking it very seriously and looking further into it. I think the thing to bear in mind is streets and suburbs can have the good ends and not so good ends. They can have you know, good properties and not so good properties. So you really want to make sure when you're looking at a particular city that you take all of that into account. Now, one of the things that I found really useful is the use of wall maps. So if you can get a hold of a wall map, and you can certainly buy these off the internet and put it up for the city or region that you're looking at, and just start marking out the areas that interest you, and maybe even grading them, like so the do not touches and the excellent suburbs. Vacancy rates. So we've already talked about this a little. We want to know, do people actually want to live there? So we're looking for areas with little to no vacancies. This whole concept that we talked about in some of those cities where they have been really badly affected in terms of property prices, but where the rental market has hardly dipped at all, they're the sorts of areas that we want to be looking at. We also quite like areas where the government housing scheme is very strong. As we said already, this is absolutely brilliant for investors because it means that you're going to get guaranteed income and you've got a larger pool of people to rent to.